Hello and welcome, finance aficionados and policy watchers. This is Iggy from Investing Iguana, bringing you another insightful episode packed with economic analysis and foresight. Today, we're delving deep into Singapore and ASEAN Plus 3, strategizing against increasing debt burdens. In this episode, we'll be unpacking the recent report by the ASEAN Plus 3 Macroeconomic Research Office, AMRO, that rings alarm bells over the growing debt challenges faced by Singapore and its ASEAN Plus 3 partners. With my background in economic trends and policy impact analysis, I'll guide you through the complexities of this issue, exploring how rising debt levels and interest rates are shaping the economic landscape of our region. We'll dissect the strategies proposed to mitigate these risks and examine their potential implications for Singapore and its ASEAN Plus 3 counterparts. So, let's dive into this critical discussion, understanding the nuances and preparing for what lies ahead in our economic journey. In a recent report released by the ASEAN Plus 3 Macroeconomic Research Office, AMRO, a leading think tank advising the Association of Southeast Asian Nations and its top trading partners, including China, Hong Kong, Japan, and South Korea, a stark warning has been issued. Amidst the current economic landscape marked by persistently high interest rates and increasing debt burdens, the report urges policymakers in the ASEAN Plus 3 region to take decisive action to address the growing concerns of high household and corporate debt, along with excessive leverage among property developers. This call to action comes as these economies, which have shown resilience through various economic trials, including surges in inflation and reactive interest rate hikes, now face a heightened sense of uncertainty. The possibility of a renewed inflationary wave leading to prolonged higher interest rates is a significant concern, potentially resulting in increased market volatility as financial sectors adjust to this new, prolonged high-interest rate environment. The report, unveiled during the group's second Economic Cooperation and Financial Stability Forum in Japan, highlights the vulnerabilities of the ASEAN Plus 3 economies to global financial stresses, such as those experienced during the U.S. bank failures in March 2023. Such events often trigger a rush among global investors towards the safety of the U.S. dollar, further tightening financial conditions and creating potential spillovers for the ASEAN Plus 3 economies. Dr. Kor Ho Ee, chief economist at AMRO, emphasizes the challenges posed by accelerated cross-border capital flows in an increasingly integrated and digitalized financial market. These rapid flows can swiftly transmit economic shocks, presenting new hurdles for regional policymakers. He advocates for ASEAN Plus 3 central banks to remain prepared to offer U.S. dollar liquidity support during times of financial stress. The report also sheds light on the significant regional financial ties within the ASEAN Plus 3, particularly with key international financial centers like Hong Kong and Singapore. The reliance on cross-border financing, largely denominated in U.S. dollars, increases banks' exposure to market volatility and liquidity risks due to foreign exchange fluctuations. Furthermore, the report cautions about the resilience of banks and non-bank financial intermediaries in the region. Acting as debt intermediaries and creditors, their stability could be tested, potentially exacerbating financial market vulnerabilities. This concern is underscored by the elevated overall debt levels in the region, which reached 300% of the gross domestic product by the end of 2022, with household debts in 2022 accounting for 60% of the region's GDP. Countries like South Korea, Hong Kong, Thailand, and Japan exhibit higher household debt ratios than the regional average. The report attributes this surge in debt to the prolonged low-interest rate environment prior to the recent inflation spike, which facilitated significant debt accumulation across various sectors. In response to these rising private debt levels and systemic risks, the AFSR advises the deployment of macroprudential tools to curb high household and corporate debt and excessive property developer leverage. For corporate debt, the report suggests encouraging more responsible lending practices and establishing a better governance framework, including credit guarantee schemes for small and medium-sized enterprises. As for addressing the high public debt, particularly noticeable in Singapore and Japan, policymakers are advised to focus on medium-term fiscal consolidation, sound debt structure, and diversifying the investor base. Singapore's public debt, mostly consisting of securities issued for investment purposes rather than budget deficits, is a case in point. So how does this affect Singapore's economy in 2024 and beyond? There are 6 key points to consider. 1. The macroeconomic landscape. The ASEAN Plus 3 Macroeconomic Research Office's report highlights a significant concern: rising debt levels in the region. For Singapore, a country that has always prided itself on financial stability and robust economic policies, this poses a unique challenge. The city-state's economy is intricately linked to its ASEAN Plus 3 counterparts, meaning that economic ripples in the region inevitably affect Singapore. In 2024, Singapore might need to brace for potential economic shocks that could arise from neighboring countries grappling with high debt burdens. 2. Interest rate pressures. With the global economy still recovering and central banks, including Singapore's, grappling with interest rate hikes, the financial environment in 2024 is likely to remain volatile. Higher for longer interest rates, as predicted, could strain businesses and households in Singapore, especially those with significant debt exposure. This situation necessitates a cautious approach from the Monetary Authority of Singapore, MAS, to balance between controlling inflation and not overburdening debtors. 3. Household and corporate debt. Singapore's household and corporate debt levels, although managed more prudently than in some other countries, will still be a focal point in 2024. The MAS and other financial regulatory bodies may need to continue or introduce more stringent macroprudential measures to prevent overleveraging. The goal will be to maintain financial stability without stifling economic growth. 4. Public debt management. Singapore's public debt, primarily composed of securities for investment purposes rather than deficit financing, places it in a somewhat different position compared to other ASEAN Plus 3 nations. In 2024, the city-state strategy of medium-term fiscal consolidation and maintaining a robust debt structure will be vital in safeguarding its economic stability. 5. Regional cooperation. As the report suggests, regional cooperation will be crucial. Singapore, as a financial hub, plays a pivotal role in ASEAN Plus 3's economic dynamics. Strengthening financial defenses through policy coordination and sharing best practices could be key strategies in mitigating cross-border financial risks. 6. Singapore's resilience and adaptability. Finally, Singapore's historical resilience and adaptability to economic challenges will once again be put to the test. The city-state's ability to navigate these complex economic waters, while capitalizing on emerging opportunities, will be critical in determining its economic health in 2024. And there we have it, a comprehensive look into the current economic situation facing Singapore and the ASEAN Plus 3 region, as highlighted in the AMRO report. We've explored the intricacies of rising debt burdens and the strategies being proposed to tackle these challenges. As we've seen, navigating these economic waters will require a careful balance of policy measures, including macroprudential tools, responsible lending practices, and sound fiscal strategies. As your guide through the complex world of economics and finance, my aim is to provide insights that help you understand the broader implications of such developments. This is Iggy from Investing Iguana, reminding you that staying informed and understanding the economic environment is key to navigating these uncertain times. Stay tuned for more in-depth analysis and expert insights into the evolving world of finance and economics. Until next time, stay sharp and informed.